AI stocks are the hottest stocks in the market in 2025. They were the hottest stocks in 2024. They were the hottest stocks in 2023. And so investors are increasingly concerned that we might be in an AI investing bubble. That remains to be seen. But investors are still looking to companies like Palantir and C3.ai to try to capitalize on this increasing trend. In this video, I'll compare the two and answer which one I think makes the better buy for long-term investors at current market prices.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Palantir has been a market darling because of its success in accelerating revenue growth and increasingly making inroads with enterprises, because it's always been a good category market share earner in government institutions. But now that it's expanding into enterprises, its revenue growth is really accelerating, and its $3.4 billion in trailing 12-month revenue is up more than 50% from 2023, where it generated $2.2 billion in revenue. Looking back all the way to 2019, Palantir has increased its revenue at a compounded annual growth rate of over 32%. Meanwhile, C3.ai has been increasing its revenue at fits and starts. Over the previous 5-6 years, its revenue has increased by a compounded annual growth rate of 29%. Of course, C3.ai is dealing with new challenges as health issues caused the current CEO to step down and is being replaced by a new CEO. Whenever there's a leadership change, there's always a difficulty period in the new leader transitioning into the new role. Another reason why investors have loved Palantir is not only the company growing revenue, but it's improving its profitability and cash flow. Its cash flow to sales ratio has jumped to 50%. That's up from negative 6.6% in 2018. Meanwhile, C3.ai has also made improvements, but not as meaningfully as Palantir. Its cash flow from operations to sales ratio improved to negative 22.3%. That's up from negative 38% in 2019. This is a trailing 12-month figure. C3.ai's cash flow from operations has improved even more in recent quarters. Another reason, and there's many reasons, why investors love Palantir is the improvement in return on invested capital. Look at this excellent trend, improving from negative 130% up to 50% in the most recent period. Meanwhile, C3.ai is working in the opposite direction. It's going backwards. Its return on invested capital worsened from 64% to negative 186%. So now that we looked at the company's performance metrics, let's look at valuation. C3.ai, I calculated an intrinsic value per share for this company at $32. The current market price is $19. C3.ai stock looks undervalued at its current market prices. It's trading near its 52-week low of $14.70. The 52-week high is $45, and the company is significantly below its 52-week high, as question marks surrounding the leadership change and a deceleration in revenue growth have brought down this company's share price while the overall market is soaring. Palantir, meanwhile, has experienced a boom in share price. It's trading near its 52-week high. Its current market price of $180 is very close to the 52-week high of $189. However, I calculated a fair value for this stock at $50.46, and Palantir stock looks meaningfully overvalued at the current market prices. And when I go back to fiscal.ai, which is my preferred data source, that's where I'm getting all of these charts. There's a link in the description if you're interested. And I look at the company's price to sales ratio, there's further magnification of the disparity in valuation between these two AI stocks. Palantir is trading at, again, near its most expensive valuation in its history, is trading at a price to sales of 125. Price to sales. This would be expensive on a price to earnings basis, but this is price to sales. Wow, is Palantir stock expensive? C3.ai, meanwhile, is trading at a price to sales of just 7. Just 7, a fraction, a tiny fraction of the valuation compared to Palantir. So clearly, without a doubt, Palantir is a better company. It's generating better revenue growth, better cash flow from operations, better returns on invested capital, better across the board against C3.ai. However, that's more than accounted for in the company's valuation. Palantir stock is trading at a super duper premium valuation above and beyond what the company has earned. It's earned a great premium, to be sure. Palantir should be trading at a premium because of its performance. However, I think the premium is being overdone. And if I had to pick between these two AI stocks to buy today at the current market prices, I would pick C3.ai only because of the valuation. If these two were trading at the same price, I would buy Palantir, no doubt, no second thoughts, just Palantir, no brainer. But they're not trading at the same valuation. C3.ai is trading at less than 1/10, less than 1/15th of the valuation of Palantir. And so for that reason, I would go with C3.ai as opposed to Palantir when going head to head with these two AI companies. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.